S&P 500 is down more than 1.5%. NASDAQ pretty ugly today as well. There's 343 on the 10-year note as well as we watch what yields are doing. So, Steph, you got major pressure. You got regional banks getting hammered. I think, it's this who's next thing is kind of hanging over the market. There's nervousness about the Fed. There's nervousness about the economy. How do you size it up here today?
It's a big week, right? We have a lot to get through, but today was ugly in terms of the JOLTS numbers, the worst in 2 years. That's problematic. So all of a sudden, the hard landing is back in action, right? Yeah. We have the debt ceiling, ex-date June 1st, earlier than expected.
According to the Treasury Secretary.
Yes.
For sure. I mean, that's just adding to the nail biting a little bit.
And to your point, the banks, all of the banks are under pressure.
Man, you see these losses on the regionals. I mean, and I know you say all the banks. You put up the regionals, guys, a board of some of these names, 20%. Right. And the like, almost across the board. And yes, some of the larger money center banks too, the 2 to 3%, not immune either.
We know that the large banks are gaining share. We know the deposits are a problem for just about everybody except the big six, right? But I think what's underplayed right now, Scott, is capital. We are going to have regulation like we haven't seen. Basel IV is going to be back in action 2023 to 2025.
You mean like capital requirements that the banks are going to be forced to hold, and that number is going to go up.
And as a result, you have less buybacks and less dividend growth, right? So I think the big banks are better situated, but that's not going to help the overall sentiment. So I don't think it's necessarily who is next, although I got to tell you, I am watching something like SoFi or Affirm. I mean, those stocks are just plummeting. And so there's real concern out there, but I don't know if it's necessarily who's going to fail next as much as, oh my goodness, the whole narrative has just changed.
Yeah. You know, Joe, under my, additional pressure points today, SoFi's on it, down like 10%. Chegg, down, last I saw was 40-something%, related to AI. But nonetheless, I mean, they are concern points that sort of they fit on the umbrella of concerns today.
So we thought 24 hours ago that maybe First Republic would be idiosyncratic. We thought that you would have some relative calm, playing off of what Jamie Dimon's comments were over the weekend. And in fact, that proves not to be true today. What stands out to be Zion down 11%, Comerica down 11%. You see the stress returning once again in regional banks, the VIX approaching 19, up 18%. And the sector that's down most today is the most loved sector in the equity market. That's energy. No, that's energy. Everyone universally loves energy. Energy's down 4.7%.
So down a lot too.
So unfortunately for me, I view this day as a significant one. I view this day as what I call a change in trend. I've expected that the calendar Q3 is going to be the most difficult one from a performance standpoint for the market. I think we are in the most intense in Q2 period where you'll see economic and earnings contraction. And on a day like today, you could not ignore all of the negative dynamics that are going on and then add upon that the technical reversal.
Okay.
And you had a dramatic technical reversal yesterday. You failed at 41.86. You never broke above 41.95, which was the high from February, and you never got above 4,200.
Mr. Yeah, but what's the retort to this?
Yeah, I understand why you call me that. I'd like to think I'm a little bit more balanced. I certainly see what Stephanie and Joe, what you guys are saying. My perspective on this in terms of what's happening today.
I wouldn't say your commentary is necessarily what you would describe as balanced. I mean, I think you're kind of an outlier on where you think the market's...
I'll tell you what, that I will accept. That I will accept. I am an outlier. I am an outlier in terms... I still think I'm balanced, but I'm an outlier in terms of where... Because I see the negatives, right? I'm not going to disagree with what these guys said.
No, but that's what I said. You're always, yeah, but...
Okay, let's move on from the characterization of me. I think what's happening today, heard you, loved it, okay? I think what's happening today
Belsky's smiling. I haven't even gotten to him yet. Go ahead.
All right?
Go ahead. He thinks he's going to get thinks he's going to be unscathed. Wait till I get to him, but go ahead.
Okay, I think what the market's saying today is Fed, watch out tomorrow. Watch out tomorrow, okay? I have been of the opinion strongly held that not only is it unwise to raise 25 basis points tomorrow, but it was unwise a month ago. And the reason is you've got an important patient in the intensive care unit. That is the banking system at whole. Certainly the regionals far more than the large. And it's just not a time to say to the banking system, go out and run a 10K. It's just not the time to do it, all right? Let the banking system heal. Another 25 basis, hang on, Steph, just one sec, okay? Another 25 basis points is going to be meaningless other than to validate the chest pounding that's been going on from Fed speakers for quite some time.
You're not alone, by the way. I mean, the CNBC Fed survey that just came out, 59% believe the Fed's making a mistake and should hold this month.